I should have did my green screen. Hello, hello, hello. Come on in, come on in, come on in. Hello, hello, hello. Come on in, come on in, come on in. Happy Tax Tip Tuesday. Yay. I know my little background be annoying, but come on in, come on in, come on in. What is banners and brand? Ah, let's see. Got it. Come on in, come on in, come on in. I'm about to get started. Welcome to Tax Tip Tuesday. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. And you see my background is all kind of jacked up, but y'all will get over it. So welcome to Tax Tip Tuesday. Today, sorry I missed last week, so I'm going to double it up today. I'm still going over the 10 deductions that most small businesses forget about at tax time. So we've already gone over home office deductions. We've gone over startup expenses. So today I'm going to go over the business use of card, professional services, and subscriptions. So let's start with the business use of card because people get this mistaken quite a bit. And a lot of times they don't give, especially as a small business, people don't give their mileage or their business expenses to their tax preparer, more so the miles. So the thing about it is this: a lot of times, especially year after year, you make out better with mileage than the actual business expenses. And let me tell you why. It's not often that you have to spend high dollar amounts of money like repairing your cars. Like when you repair or do a major repair on a car, you won't have to do that again for a few years. Now you might spend a lot of money on gas, but then it's tricky because if you don't have a dedicated business vehicle, meaning that you use your vehicle for business and personal, then it's hard to differentiate what was business and what was personal when it comes to gas, repairs, and all of those things. However, with mileage, you can specifically say and prove in an audit, I visited X client, right? On these days, based on your appointment calendar, things like that. So if you were ever in an audit, you can just the miles that you claim on your taxes, whereas you cannot do that. I'm turning this dang on into my email because that'll be distracting me over and over and over. Because I get a lot of mail. So, but it will track, like you could prove in an audit that you actually did those miles for business, right? So keep that in mind with business use of vehicle. It's kind of the same thing with business use of home. It's not 100% unless it's 100% used as a business vehicle. So like with me, prior to me buying a vehicle through my business at the beginning of this year, prior years, I've always done mileage. But the question was, is it business miles or is it personal miles? So when I got my vehicle in 2017, I had just been in a bad rear end car accident, bought my vehicle, and I was having so many medical appointments. So I intentionally did not put my vehicle as a business vehicle because I needed to subtract my medical miles, right? And I itemize. So yes, medical miles count, right? And itemize for medical, for the medical part of things. So I intentionally did not make it a business vehicle because I knew I had a lot of medical appointments and stuff like that. So if you're in that category, keep your vehicle yours and subtract those if you itemize. If you don't itemize, it's not going to benefit you to track your miles or keep the vehicle as a personal vehicle, period. But as soon as my medical side of things were done, which was a couple of years later, right, I went ahead and made the vehicle, I sold it to my business, okay? And then I I have a personal piece of use of the vehicle. And actually, my personal piece was going to the store, which I did as part of an errand. I was already out doing business, and the store is right down the street from my house. So, really, all the miles on my vehicle were business because I don't leave home, even still. I don't leave home unless it's really for business. So, it's easy for me to track my miles, right? Um, but people get that mistaken that they could write off their miles and their expenses, or that their expenses is more than what you would get in miles. Now, year to year, because it is part of taxes, the tax miles change, like the deductibility of miles change. So you may make out better as miles. But one thing that you can't do, at least you couldn't do before, I need to look it up because I haven't had to worry about that. But you just couldn't do, oh, 1 year I'm gonna do miles, next year I'm gonna do actual. You can't flip flop like that. Okay. So you pick a method and you stick with it. Now, you can be in a method and choose to go to the other method, but you just can't go backwards, right? You can't flip flop, but you can change from one to the other. Same thing as like cash versus accrual basis of accounting. Once you change, that's it. So when you make changes like that, make sure that that's what you want to do. Now, like if you're in the business of Turo and stuff like that, I would very much well do miles. So what miles cover is the wear and tear of your vehicle. You still get to deduct parking and tolls, right? And you get to deduct the interest that you pay on financing for a vehicle. Otherwise, you could deduct, if you lease the vehicle, especially for the business, you deduct 100% of the lease fee for the vehicle. But so with that in mind, miles may be better for you. That's normally what I see. Is miles is makes out better because if you ain't driving nowhere, you ain't using gas. Like I said, you don't get repairs every year, so it doesn't make sense to do actual expenses. And true, maybe actual expenses because I know a lot of wear and tear go in those vehicles, but it's because of the miles that's put on the vehicle for the wear and tear, right? So think about it as that. Miles is supposed to encompass gas as well as any wear and tear of the vehicle, thus maintenance, right? So look at that, track it. And if actual works out better for you, then stay with actual. Otherwise, do miles. Okay. And once you switch, you have to stick with what you switch to. I didn't really introduce myself formally. Like I said, I am the CEO of TLJ Professional Services. I bring to you almost 40 years experience and education in bookkeeping, accounting, as well as tax preparation services. We do everything from setting the business up all the way through tax prep and tax planning. So everything in between. And that's why we say we are about all things financial. Okay. Now, moving right along. Professional services and subscriptions. So any fees that you pay a professional is deductible for your business, whether it's legal fees, accounting fees, marketing, branding, whatever you pay somebody on behalf of your business is deductible. Okay. What you need to be mindful of and get into practice and create a policy around is when you start working with a new person that you're going to pay out, even if you don't think you're going to pay 600 or more in that year, it could be the next year if you continue to do business with them. Get in the habit and practice of requesting a W-9 from that contractor or that professional. I won't call them a contractor, that professional, okay? They are a contractor unless you make them an employee, but you want to get a W-9. W-4 is for employees, W-9 is for contractors, okay? It's their tax ID information, address, legal name, all of that stuff. They certify to that when they sign that form. Okay. And I say that because you need to know whether or not you need to issue them a 1099. Now, a 1099 is issued to anybody that provides a service, not a product, but a service to you, and you pay them more than $600. This is no different than W-2s that's reported from your employer to the IRS. That's what a 1099 does. It reports earnings to the IRS for a particular person based on their Social Security number, okay, or business ID number. So because, like as an LLC, you have an EIN, but it goes on your personal return, you still single member. Even if it's partnerships, you still have to pay Medicare and Social Security tax. All of those things is still tied to your Social Security. So that's why it's important to get a W-9 from them to determine whether or not they're supposed to get a 1099, because that could come back and be a fine or penalty for you if you do not issue 1099s to a contractor as you're supposed to. Okay, it could be a workers' comp issue or audit if they should be classified as an employee and you have them as a contractor. But no matter what, anybody that you buy services from or pay for services is a professional fee that you can deduct as an expense on your return. Now, if you buy products from them and it's what's used to create something in your business, it's part of cost of goods sold, okay? So that's also deductible. It's just, where do you record it, right? Do you record it as cost of goods sold, or do you record it as an expense? So be mindful of that. Other things that people forget about is subscriptions, okay? Not just the Google, right? If you have Google, Gmail, Google account, whatever, and you pay for it, that is a subscription that you get to write off, okay? Magazines, journals, like if you have somewhere where people come in and visit your office and you have magazines out, so you subscribe to magazines, or you subscribe to magazines or journals, or what do you call them? Industry related articles and stuff like that that you pay for, is continuing education if it's part of your industry / career, right? So because I am a licensed life insurance life and health insurance agent, you know, I subscribe to investment magazines, right, and REIT magazines, because it's a strategy that's used as an S corp, which I'm very pro S corp for my corporations out there. So I subscribe to them to see what offerings there are, right? It's a business write-off. So anything that you use pertaining to your business is a write-off. It's just, where do you write it off and how do you write it off? So subscriptions, professional fees that you pay, those are common expenses that don't get included on tax returns, or you leave money on the table because you either forget that you paid it, you don't think that it's deductible, and then the business use of your vehicle, how to do that. So when I started, before I reintroduced myself, I was talking about the business use of car. Now, when I did have my vehicle under me personally, because I was doing all the medical appointments and so forth, my business paid me a stipend to use my vehicle, in essence, to go and conduct business when I had to go to meet clients and things like that. So they paid me a stipend every month toward for using my vehicle. So it was like equipment lease, in essence, right? So that's how we did that with that. So keep that in mind. Okay, I covered that later on, so I won't talk about that yet. But so to recap, I'm combining last week's Tuesday with this week's Tax Tip Tuesday because I was in the challenge last week. So if you have not seen me in challenge, baby, if you want to really learn about your finances, sign up for businessfinancesmastery.com. We are updating the dates. For the next date will be September 11th through the 15th. It is a 5-day challenge, so we are updating the dates. So you can't register until starting tomorrow as we update that information. But I do advise you to get in the room, get in the room, get in the room. Okay. I'm going to put that in the chat for if you watch this on replay, say replay, get in the room, business finances mastery.com. Okay. Register for the challenge. Starts September 11th. But in any case, you'll learn about a lot of these things. What you can write off, what you can't, the business structures, all of those things. We go over KPIs. It's a lovely challenge. Did my first one last week. So I combined my Tax Tip Tuesdays because I did not do Tax Tip Tuesday last week. I do have that challenge coming up. So the week of the 12th or the week of the 11th, I should say, that week is continuing education. I'm going to try to remember to do a pre-recorded Tax Tip Tuesday so you can still get it on Tuesday. Otherwise, I'm going to double up again, okay? That you're going to get this information, okay? So as it stands, we've gone over home office deductions, startup expenses. I just went over business use of your vehicle, as well as professional services and subscriptions. Next week, Tuesday, we'll talk about travel expenses and what that looked like, what it means, how to write off what portion and all that good stuff, how to do it the right way. You hear me? So I look forward to seeing you on the next Tax Tip Tuesday. Again, type hashtag replay when you see this and join the mastery. Okay, the challenge is a 5-day challenge. I put it in the chat. I'm just now putting it in the chat, so you won't see it till about the 16-minute mark, but you're hearing it now, so you should see it now. Okay. So I will see you in the challenge. I will see you next week on Tax Tip Tuesday. And I am Tracy LT. I am the CEO of TLJ Professional Services, where we are about all things financial, talking to the small business owners, you 6-figure business owners that's doing it all yourself. Join the challenge. Okay. Otherwise, know what you can and cannot deduct in your business on your Schedule C if you're sole prop or single member LLC, or even on your partnership return 1065, or even if you're an S corp. Okay, you get to write off more if you're an S corp. But I'm talking about the 10 most missed deductions that small business owners forget about at tax time. So, like I said, I've gone over 4 thus far. So we have 6 more to go. See you next week. Happy Tax Tip Tuesday. Be blessed.